Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 25th of July 2017 and we wish to share with you some information we received yesterday by email. Of the many publications and articles we received from pumpers and non-pumpers alike, one caught our eye yesterday. It was from a publication called goldeagle.com. And the article was written by Roxy Lewis. Roxy was very critical of Fed Chair Janet Yellen when she indicated that she hopes that there will not be another crash similar to 2008 in her lifetime, mainly due to the policies she and other regulators have put in place. He also argued that at current levels, if gold could once again buy the Dow at 1-to-1, we would be looking at a gold price of some $21,000 an ounce. Then he made a most interesting comment, and we shall quote him exactly here. Quote, "My best guess is that in the next 3 to 15 months, we experience a 57% drop based on the 2007 drop in the stock market to 12,255 points, or maybe much worse. Next, if we utilize the average Dow to gold ratio over the past 20 years of 20-to-1, we could see a gold price of $612. The gold volatility rate is at new all-time lows, which means the gold market is less and less appealing to traders and investors. Sentiment is extremely low as gold has dropped 44% and has been moving sideways, trading between $1,200 and $1,250 from 2013 to 2017, unquote. Now, if you go to markettrends.net and look at the Dow to gold ratio, you will see that he is right. The average over the past 20 years has been around 20-to-1, peaking at nearly 42-to-1 and bottoming just above 6-to-1. So theoretically, his argument is sound. Now, we disagree with it. Firstly, gold has been trading between $1,200 and $1,350 in the 2013 to 2017 time period. Also, we would conclude that in the eventuality of a stock market collapse, monies will leave equities and at first move into government bonds or treasuries, assuming they're not collapsing at the same time, with a reasonable percentage going into gold and consequently silver thereafter, thereby witnessing a rise in their price. Of course, if there is a collapse in the value of the dollar, then this will push up gold and silver prices even further. But here we're talking about stock market falls or major corrections. That said, Roxy continues, quote, "The simple truth is that gold is not cheap at the $1,220 price, historically speaking, but lies today within a normal range of $700 to $1,300 price range. Don't get me wrong, I'm not saying to wait to buy until gold bottoms out at $700 or below, because if it does, you will find the shelves are bare. However, historically speaking, gold prices are somewhat above average in price. One simply cannot state that gold is cheap today. This being said, I cannot find anyone to agree with me other than Harry Dent and possibly P. Radomski, who says the bottom is in and yet the price may go lower to our number. My belief is that the price is going lower, but don't wait to buy," unquote. He adds that if you superimpose the past parabolic price increase of gold in the early 1980s to 2000 over the current parabolic rise in 2009 to 11, gold could languish again for 20-some years before its next peak. So there we have it. Someone who believes that gold is the commodity to buy, but accepts that it's not currently cheap, and that there is the possibility that it may languish for some years yet. Of course, if you believe those who advocate that the Fed wants to crash the dollar and blame President Trump, or that the debt clock is unsustainable, then these comments should be ignored. However, our view is that the Fed does not want to crash the dollar, and that the debt clock can rise to $30 trillion before the SHTF scenario is reached. And therefore, though we are not as pessimistic as Roxy's figures, it is important for all of us to at least see and hear alternative viewpoints to the normal pumping arguments. After all, many thousands of people would today be much wealthier if they had listened to the bears on gold and silver back in 2011 and 2012. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.